the Never Lose a Deal podcast, where I talk about creative financing and raising capital for real estate investors. So, today I want to continue a discussion that I had last week. So, during my last podcast episode, I talked about the $1 billion takeover and I talked about Capital One acquiring or at least working towards acquiring Discover Financial. And during that episode, I talked about some of the intricate things that the government is talking about. But I know you may be wondering, well, Lorelia, what does that have to do about your topic today? Finding self directed IRAs. Well, after that podcast episode, I did a video live stream just on YouTube. So I know currently right now I'm doing a podcast that will be streamed on YouTube as well as it will be featured on all the podcasting platforms. But last week I did a few live broadcasts just on YouTube. So if you want to learn more about some of those things that I was talking about, you can head on over to my YouTube channel. It's actually, you can go on YouTube and just search my name, Lorelia Brown-Phillips, and you can find it. Well, during last week, I talked about, and as well as here on this podcast, for the remaining month of April, my goal is to talk a lot about raising private capital. I'm going to talk about private lenders, and it is part of the funding framework that I actually assist clients with in order to fund their real estate deals, portfolios, investments, or what have you. So one day I talked about private capital and how it is something that an individual should consider with having as part of their funding toolbox. Now, what I do want to caution, because I do feel that it is not appropriate to send ducks to Eagle School. And by all means, I don't mean to offend people, but I don't want to have people to believe that raising capital is for everyone. I never, as always, never want to be salacious with the information that I provide because I personally do believe that some people are not at the place where they should be raising capital in their real estate journey. And the reason why, and I talked about this in previous podcast episodes, I've talked about it, primarily on my YouTube channel when I do direct live videos, is because a lot of people do not know their numbers when it comes to being able to do real estate. Because if you desire to have investors to invest in your real estate deal flow, opportunities, you need to know how to communicate why it's even a win for them to take part of it. And so that's why when I work with clients as part of, my funding framework, I am a big advocate of that you should be able to learn how to work with your money. And whether that is you are entering real estate with no money down, or you are starting real estate at a very low investment and you're moving yourself up, one of the things that you're going to learn with any of those things is the ability to really analyze and understand how that real estate transaction works. At least that's what I would hope. But repetition, the one thing about repetition, when you do it over and over and over again, you do get better because you're going to look at if you've had some shortfalls, you're going to look at what are some of the shortfalls that you've made. You're going to be able to compare it to how you would make it better. And so as you continue to do that, once again, leveraging what it is that you have, it will give you more of the courage, more of the ability to communicate your value to a private lender. And when I say private lender, I'm not talking about hard money. I'm talking about individuals, and on this episode, self-directed IRA investors who would possibly partner with you. But you cannot get that courage to do that until you have did some things on your own. So I think that is the roadblock that many people have, because even when I have worked with people who were just trying to obtain, whether it was credit card funding, whether it was some type of mortgage financing, whether it was some type of investor loans, the thing that many people do not know how to do is they do not understand the deal. They don't understand what it is that they're investing in, and they don't know how to communicate that to the lender, which is why many people have a shortfall with being able to obtain funding, because many people really do believe that a lender or a private, and a private investor is going to sit down and analyze the deal for them. And I always tell people, you're not going to have the ability to play monopoly with someone else's money. Now, you may can do that with your own, and that's what I tell people. But most people, they're not even going to play monopoly with their own money. So they want to be able to fumble somebody else's money, but they don't want to fumble their own money. They're not willing to put up the risk. They're not able to take the hits, but they want to be able to do it with someone else's money. So I say all that to preference, as I continue having these conversations and talking more about raising capital, it is not coming from a place of how can I do this to get some quick cash, because I'm a big advocate of being able to cultivate and create relationships. You cultivate, you create relationships, you're able to communicate why it's a financial win for the investor as well as you. Money will never be a problem. It will be your oyster. And so that is what I want to talk about today, because during my conversation, as I begin to talk more about this raising capital, um, um, as I begin to talk about more about raising capital, today I want to talk about where they are, because last week, I've kind of gave an introduction to it. I talked about that there are different ways that individuals or investors want to invest with you, but primarily I talked about today I want to talk about is self-directed IRA investors. And who are self-directed IRA investors? Well, one thing you have to start with, what is a self-directed IRA? So a self-directed IRA is your ability to control the investments that you want to have within your IRA portfolio. And what do I mean by that? A traditional IRA or a Roth IRA that most people are familiar with, if you are familiar with the terminology of IRA, are the is usually with investment companies. And so a lot of times the traditional IRA that a lot of people are familiar with, it gives you the ability to have a fund manager who may invest in stocks or bonds or any type of investment vehicle that you can't control. Because if you invest in a fund, the fund is going to decide on what companies they're going to invest in, as well as the investment type. It may be stocks, it may be bonds, it may be REITs, or what have you. Well, a self-directed IRA, you have the liberty to be able to use an investment vehicle that you choose, hence real estate. Now, of course, there are other things with self-directed IRA investments that you could choose, but of course, I'm not going to talk about those because that is not the point of the conversation. The point of it is that a self-directed IRA that you choose, which real estate gives you the ability to be able to invest in real estate within your IRA. So you as the IRA owner have the ability to invest in IRAs. Hence, not the same as institutional IRAs where there's an investment fund manager or what have you. So, with that being said, there are self directed IRA investors all over the US. Now, of course, I'm only staying within the realm of the US, but within the US, there are um, self directed companies that are able to house and be the custodian of those investments for the IRA owner. So, my conversation and what I want to illustrate to you today is to show you where those investors are at. Because last week, when I did the live video, I did say, hey, they are there. There are investors that are willing to invest with you. But I know many people are going to say, well, Aurelia, where are they at? And that is what I want to illustrate for you today. So, for my podcast listeners who may be listening on Apple or maybe Amazon or some of the other podcasting platforms, you will not be able to see what I am illustrating, but my goal is to be able to verbally communicate for those who may be listening. Now, for those who are visual learners on Spotify as well as YouTube, I am actually giving you a visual of what I'm talking about. So prior to, I'm going to share my screen right now. And what I'm doing right now is I am sharing my screen. So for those who are watching, I am currently sharing my screen. And so if you see my screen, this is the public records site for North Carolina. Now, I just did a random search within states that I invest in. Now, of course, North Carolina being one state, and I am going to show another state for you. But I picked a state, which is North Carolina, but within that, I have picked a county. So, for those who are familiar with Charlotte, you know that Charlotte is in the county of Mecklenburg County in North Carolina. So as you can see, for those who can see my screen, you can see there is a list. Now, this list, I did a search. I picked a self-directed IRA custodian. One of the most common ones is equity trust. And when I put in the search, now, one thing that I do want to say, there are some states that you have to sign up or pay a fee to get access to the information. This particular state and county, I did not have to pay. It is free. Now, of course, for those who are looking for another means, yes, you can buy lists. There are lists that are out there, list serving websites, but I'm just giving you an idea of so people can see that the information does exist. Because some people a lot of times think that it's just a theoretical thing. Oh, everyone is saying that, self-directed IRA investors are everywhere, but I can't seem to find them. So that is what I want to share with you today. So put in the search equity trust. And as you can see, for those who can see my screen, we have a list of investors, a laundry list of investors. Now, of course, they tell us if it's a deed, if it's a quitclaim deed, affidavit, another type of deed, or deed in trust. So now, what I'm going to do now, I'm going to come back to my screen. I pray that you all were able to see that, but I'm going to give you another visual of the actual image of what I was looking at. And I think this is it. So let me share. So another visual of what I was looking for. So I showed you the search history. I put in what I was looking for, and I selected a visual to be able to further my search to find who the particular self-directed IRA owner is. And so for this person, now, of course, I don't know who they are, but this particular self-directed IRA owner is this person, Frederick and Casey. So they invested in this particular person's home. Maybe it's an investment property, like I said. I'm just doing a random search. And so here is an address for the self-directed IRA owner. So now I know I'm looking for self-directed IRA owners. I know that there are investments that real estate investments that I'm looking to invest in. And so if I am looking to connect with self-directed IRA owners, what would I do? I would do some type of campaign, a marketing campaign, a mailing campaign, letting them know that there is an opportunity that I would like to show them how they can invest with me. Now I know people may be wondering, well, that seems real weird, Lorelia, that just a random person, you're just gonna find somebody random online who's going to want to work with you and they're going to give you money to raise capital for a real estate investment deal. Ladies and gentlemen, it is done every day. I do not know about you, but I am often solicited from different types of companies, whether from real estate, whether it's from financial services, looking to do business with me. I get direct mail sent to me all the time. If you were to look at a newspaper, there is some solicitation that is being given to you to ask and invite you for your ability to invest with them. And that is what I'm saying right here, ladies and gentlemen. All you are doing is finding self directed IRA owners, sending them information on what it is that you do, and do they want to have the opportunity to talk to you to learn more about what it is that you are doing. Now, let me preference this by saying this podcast episode is talk about finding self-directed IRAs. Now, this outreach is considered cold outreach. Yes, there are things that you can do with your warm market. But once again, the caution with that, and everyone has their sweet spot with what they feel comfortable with doing. I personally very cautious about, and let me give you an example. I want to preface it by saying you have a warm market. Now, these warm market of individuals may be, maybe a friend, maybe an uncle, maybe an aunt, maybe some church members that they have some retirement money that they are looking to put to work. That may be the case. That is an example of a warm market. Now, some people may feel comfortable with going to those individuals, but this is what I want to say. This is that you have to be very careful, because those individuals, your warm market, that may not understand real estate, and if you don't have the ability to communicate how they can um, get some type of return on their money, because you can't do any guarantees, but you have to be able to communicate that to the group of people who are your warm market. Though that warm market, now, once again, I want to differentiate the warm market. This is a warm market that these people know, may trust, and they may like you, but they do not have no knowledge of real estate. But you may have another warm market where these individuals understand real estate, they understand returns on investments, and if you can be able to communicate to them how they can put their money to work, once again, not using no guarantees, but how they can put their money to work, that may be a more familiar conversation that you may want to have. Just want to point that out. Now, once again, you could still do the warm market that these individuals do have some excess funds they would like to put to work, but they may not have no knowledge of real estate. So that is why understanding your numbers, understanding how you're going to communicate to them, understand that there are no guarantees, all those things you have to do. So once again, the self-directed IRA owners that I just showed you, that of course they don't know you, you don't know them, but the one thing in common is they understand real estate, because what I've just showed you is an example of they're already investing in real estate. That is why sometimes, and I personally like to work with people when it comes to raising capital, with people who understand the conversation, people who are a little more sophisticated when it comes to talking numbers and talking about investing with a possibility of return. That's my jam, because once again, I'm a big advocate. And I know people are not going to like this analogy. Don't send ducks to eagle school. You have to be very careful when you're talking to a group of people who may not have invested anything outside of their financial fund account that may be housed by any of the big financial institutions. Don't want to call no names, but a lot of people are familiar with that. They're familiar with the Fidelities. They're familiar with the Charles Schwabs. They're familiar with the Merrill Lynch. So they may feel more comfortable with keeping their money there, because if their money is there, you cannot try to have a conversation with them to be able to use that money to invest in what it is that you're doing in real estate to raise capital. There's a transfer that has to take place. And I know I'm, really loading a lot of information in this one podcast episode, but what I do want to bring forth to you is there is a process. So that's why previously, I preference this by saying that this is not a money grab opportunity for you to solicit money from people and not do it the right way. You want to be able to do it very ethically, even with cold self-directed IRA owners. That is why knowing your numbers is key, because I find it very strange. I talk to people all the time, and I've had people who I may have reached out to because I've had a previous conversation with them, and they may have been looking for funding, but now, I may have, connected with them. It's been a year later or what have you. Always do follow-ups. And a lot of these individuals have been able to raise some private capital for themselves. But when I go a little further on, ask them about the terms or whatever, what are some of the things that they worked out with their private lenders. One thing that I noticed, I'm going to save that for another podcast episode, is that a lot of times they let the private investor run the show. Meaning, just because the private investor, lends you money for a real estate deal, doesn't mean that they run the show. Because depending on what it is that you're doing, and what type of role that you have communicated to them, or they're an active piece in what it is they do, because then I can understand that. But if they're taking on more of a passive position, meaning they're just looking to put their money to work, then they don't quite get the ability and the freedom to really run the whole scenario. So of course, that's just an abbreviated version of a much bigger pie that I'm not going to really touch on right now, but this is just to give you a piece of some of the things that I plan to talk about this month. So once again, finding self-direct IRA owners, I talked about it. I want to just recap on what I just, talked about today on this podcast episode. Talked about the difference between a traditional IRA, one that is with a financial fund company that most people are familiar with, whether you're investing in a traditional or Roth IRA, directly or within, with your job. That's totally different from a self-directed IRA, where you have the freedom to be able to pick your investment vehicle to invest in. Now, there are many things that you can invest in with the freedom of self-directed IRA, but of course, today we're just talking about real estate. And also, with that being said, I talked about how you can find lists. I picked the state of North Carolina, the county of Mecklenburg, which most people are familiar with Charlotte. I showed you a list of all type of IRA owners, and then I particularly opened up one to show you this particular self-directed IRA owner. So once again, this is Lorelia. If what I share with you has been something that has enlightened you to help you with your real estate journey, if you're watching this on YouTube, please leave me your thoughts. Leave me a comment. Let me know what you thought. If you're listening to this from one of the podcasting streaming websites, please rate it, subscribe to it, and let me know your thoughts there as well. So, once again, for those who would be looking for, because during the week, I will be having impromptu live sessions going more deeper in these conversations, but that would only be exclusive for YouTube. And once again, you can find my YouTube channel by going into YouTube search, putting in my name, Lorelia Brown-Phillips, or putting in the Never Lose a Deal podcast, because my podcast is streamed through YouTube. So you can find it there as well. And there I would be doing live sessions throughout the week, going further and deeper in with this conversation of raising capital, which is going to be part of your funding toolbox as you move and be able to invest in real estate. So once again, this is Lorelia. Like I said, look forward to talking to you in the next podcast episode. Until the next time, bye-bye.